So PayTM is in the news quite recently. It went up by 7%, mainly because PayTM came out with something called as a buyback offer. Look at this. So PayTM surges on buyback plan, right? PayTM came out and said, we have a lot of money in the bank account, we're going to do a buyback, right? Now, as we know, and as we've been learning over a long period of time, right, we know that buybacks are good for a company. Yes, most of the time buybacks are good for a company, but a company that is not making profit, is it good for the company to use its cash reserves and do a buyback? Question mark. I'm asking you guys. For a company that doesn't make profits, okay, is it good for the company to do a buyback, or should the company focus on making profits first and then doing a buyback? Cool. So this is something that is very wrong. What is happening right now is wrong. But obviously the PayTM stock went up by 7%. Then we have another beautiful article that came out again by this N. Mahalakshmi, which talks about the good, bad and the ugly. And they're saying why PayTM buyback is actually happening. Is PayTM buyback happening for retail investors like me and you, right, who have bought the money and want to exit at a small rate? Or is PayTM buyback happening to bail out the big investors who have come? Think about it, right? Because the big investors now get a nice exit because PayTM is down 70%. Okay, let me just show you just in perspective how does PayTM chart look like for all the people who have invested in PayTM. This is how PayTM looks like. I can't even like go up. Okay, this is crazy. This is how PayTM charts looks like, right? So all the people who had bought PayTM, all the big investors who had bought PayTM could never exit because it never looked attractive. Yes, IEX did the same thing. But the thing is, Gauri Shankar, IEX actually was making profit. I am okay with IEX doing a buyback. Whatever reasons they had, IEX made profit. So I'm okay with that. But here, they've not made a profit. They're still going ahead to make profit. And in fact, with UPI, they're actually suffering even more because now more and more people are using UPI, right? So that is again another problem. Have a look at this article. Just Google PayTM buyback, the good, bad and ugly. And this clearly mentions that a company that is just trying to take the stock price up. Even Nykaa did the same thing. You remember Nykaa gave a nice bonus to all the investors. But do you see a very similar trend? All companies that have big shareholding, right? All companies that have big players at the shareholding are being somehow weirdly manipulated into doing things that are not supposed to be done, right? This is not supposed to happen. This is not right. From a corporate governance standpoint, it is not correct. But the bonus from Nykaa was a similar example. Now PayTM buyback when it makes no sense is a similar example. So all of these things keep coming and trying to give a fake dilasa to people, right? Now what will happen? Ye buyback sunke, what if all of us will start buying, right? And if all of us start buying, then what happens? The stock will again fall down after a point because the fundamentals of the stock are not very great. Yes, that is the problem. Now, very good question by Rishikesh. PayTM has cash reserves. Yes, and let's understand PayTM's cash reserves very clearly. Okay, let's look at this. So PayTM has a net cash pile, let me zoom in a little bit more, of 9,100 crores as of September. But out of that 9,100 crores, 5,600 crores was from the IPO proceeds, which is left from the IPO proceeds. So basically they have 4,000 crores left. Okay. Out of 9,100 crores, 5,000 crores was the money that they got from the IPO, remaining money that they have from the IPO. 4,000 crores or 3,500 crores approximately is basically left in the bank account, which is their old money. So they can only do buyback from their old money. They cannot touch IPO money. This is very clear by SEBI, that SEBI says if you raise an IPO and you take money for some reason, you have to use that money for the actual reason. You cannot do buybacks with that money. So now what usually happens, a buyback is announced, okay, at a very high rate. Okay, obviously small investors like me and you will maybe sell PayTM to the buyback tender, but the big investors will talk to private equity people, will talk to big mutual fund houses and say, let us do I will sell it to you, you buy it from me. I will sell it to you, you buy it from me. So that is what might happen. The dealings behind might be bigger than what you might actually see right now. Okay, so this is not in good light for retail investors like me and you. This is more for private equity investors, the big investors who did not get an exit. They might exit now by getting another big person. It's like a bakra game, right? These guys got caught, they'll find one more bakra and they'll sell it to one more bakra, and that guy get caught, he'll find one more bakra, sell it to one more bakra. No offense to bakras, right? But this is what will keep happening. It's like a very weird scheme, but this is what happens usually in the entire market. It's very common. Nothing wrong in that. It's very, very, very common. Yeah. So this is what is happening again with PayTM. So you guys can check this out. And there's a recent article that came out saying PayTM can't use IPO proceeds for buybacks, firms liquidity to be used. And now if firms liquidity to be used, How much will it be used? This is a very good case study we are learning, right? Let's understand what is the psychology behind this, and this we'll understand on 13th, right? We will understand on 13th. So we will understand on 13th and we'll understand what is going to happen. Tube investments. Oh, recently massive. Whoa, 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 whoa. This is so nice. I know for a fact one thing about tube investment is that tube investment is held by a lot of mutual funds. A lot of small cap mutual funds are holding tube investments. Okay, so let's understand a little bit more about them. And right now, whoever has identified or whoever did this, I think the community itself chose tube investments. Right now, it is currently edging at its all-time high, which is a very good position to take also if you're considering taking a position. This looks very attractive right now. Let's make it green. This looks very attractive right now. Whoever, I mean, kudos to the community. First of all, I would thank the community for finding this stock. It's obviously famous, but we can't keep tracking all the stocks. But all of you guys who are watching this, I think you should thank yourself and the people who voted for Tube India. This looks very attractive. Let's understand a little bit more, because also there's a recent rally here, so I don't want to get too ahead of myself. But the rally is not too big also for it to be a big concern, and there was a recent massive thing. Let's understand more about tube investments. But very good. Whoever, this is the power of, I think, the community, right? It was added by MSCI along with VBL. Oh, very good, very good. 58,000 crore company, so pretty much in the large cap zone itself. Current price is 3,000. Dividend yield not very great. ROE and ROC is quite interesting for engineering company. Price to equity ratio is trading at 67 right now. Market cap to sales is 4, which is completely all right. What does Tube India do? Basically, Tube Investments basically is one of India's leading manufacturer of wide range projects for major industries such as automotive, railway, construction, mining, agriculture. Company's 3 main verticals are engineering, metal form products, and bicycles. In line with the growth, the company has forwarded into TMT bars. Okay, that is interesting. And looking at where their entire money comes from, engineering division 29% of the money compared to 44%, which has taken a small dip. Even metal formed has taken a small dip. Cycles division has given 17%. It sells cycles through its BSA, Hercules, and Montra. Okay. Okay. Very interesting. Very interesting. Very interesting. Okay, let's go more deep into this. So from a max chart perspective, looks very attractive. Looks like a long-term compounder from that perspective. From a 1-year chart, also looks very attractive. Going more into the revenues quickly. Let's look at yearly. Let's look whether it's a cyclical. No, it's not cyclical. It's pretty okay. Let's look at yearly revenues. Beautiful, very good revenues with an average margin of 10 to 11% is what I would say. Healthy net profit with a good increase, consistent increase in your EPS also. Good stock CAGR. Very good equity to reserves ratio, I mean borrowings to reserves ratio, which is debt to equity ratio, is also looking very attractive. Whatever this said and done, good promoter holding. FIIs are increasing stake. This I know because this I saw in a lot of small cap funds in DIIs. Basically, I think SBI holds this, right? A lot of those guys hold funds in this. Let me check the DIIs. Yeah, SBI fund holds. Very good. 14% is DIIs. Quite interesting over here. Government holds almost nothing and public holds 12%, which is good because again the free float is low. So one thing to understand here, guys, is this stock is very heavily dependent on the FII and DII movement. I'll tell you why. Because 46% is held by promoters and the remaining 40% is held by FIIs and DIIs. So if tomorrow, okay, this is one negative that I see of the stock as well. If tomorrow there is something that goes wrong with this company, both FIIs and DIIs will say Tata bye bye, see you, right? And if that happens, you will see massive, I'm not talking about little, I'm talking about massive profit booking, right? Because as you see here, 46% is promoter, 26 plus 14 is again institutional investors, both DII and FII, which is 40%. So if this goes wrong or takes a wrong turn, then it will go down quite significantly and quite drastically, right? Or else no problem, or else I don't see any problem in this at all. So from a technical standpoint looks good, from a fundamental standpoint looks good. CRISIL AA plus stable re-rating. Okay, this is on October 26th. This is very good. Very good. CRISIL AA rating is very good. 700 crore loan. Obviously, I think the reserves are also around 3,000 crores. So this is again very good. Let's look at what is happening. Due to strong cash generation, the company will also be able to retire entire debt materially, mainly at CG Power. Healthy demand from end user segments like automotive and industrial machineries business drove the recovery. Better contribution from a subsidiary, 58% subsidiary, CG Power. Okay, Shanti Gears, another subsidiary that they have. That is why they're in the gear segment as well. Looks very good. Weakness, yeah, bicycle sales, volume sales is very weak. I don't know how many of you all, I don't know how many of you all are cycle people, but I think now a lot of people prefer Firefox and those type of cycles, right? Instead of Hercules and BSA. We're going into more functional kind of cycles. I'm pretty sure they're also in that space. But now people are going more for branding. Okay, so sluggish sales, I am completely all right with that. Past vulnerability to intense competition and cyclical slowdown, especially from automobile and engineering sector. This I feel is not going to slow down right now in the next few years. This I feel is not going to slow down. I feel this is going to become more and more interesting. Both from automobile engineering and the normal sector, this is going to become more. This is actually a very good bet you can take for the next few years. I think we can take a bet. I think we can take an open position on this right now. I have no problem with this. This looks very attractive. I don't see this going wrong until and unless something really wrong happens. I don't see this going wrong at this point right now. This looks very attractive. Look at this. All of them have given buy ratings. All the buy ratings have worked out well. Recently, Motilal Oswal has come out with a buy rating which has already gone up 35% target met of Tube Investments, which again comes to question, is it little overvalued? But this is a very good thing that you can read for all the people who like reading research reports. Let me show you how to quickly read research reports as well. EVs is a big focus area under the TI2 strategy, which plans to cater to 4 segments. So basically, performance was driven by strong revenue growth, particularly in engineering business. Traction is revenue is expected to continue. Okay, very good. Driven by recovery in underlying auto volumes, traction in railways. Very good. We have maintained our FY22-24 estimates and buy rating with target price of 2380. It's gone above target price of 2380 also. Okay, very good. Strong growth. Engineering business is still there. Railway business has started to see traction. Yes, this is something that I've seen, that India is doing a massive revamp of the railway business, and that is why you see all your railway stocks also going up. EVs remain a big focus, which is completely fine. Diversified revenue streams, okay. I would like to know what is the breakup of the revenue. Segmental mix. This is what I wanted to see. Okay, according to FY22, majority is engineering business, so that is great. That is good to know. Okay, majority is Q4 is also revenue is coming from this. And the second biggest revenue is coming from metal form business, which is I think the TMT bars. Third comes from mobility, and fourth comes from other business. This is fine. This is fine. As long as this is the moat, I'm okay with that. Exports were 16%, which is very low. Even if it gets affected, not much. 21%. Engineering will never stop. That's the great thing about engineering. It will never stop. I think we can take a bet on this, guys. This looks very good. You guys can go read this out as well whenever you guys are free. This doesn't look bad at all for all the people who are thinking about doing that. I just want to see what is the EPS, ROE and ROCE to expand, PAT to expand. Very, very good. What is the projected PAT is fine. Here, this is the main thing I want to see. Projected EPS, they're going at 114 at that time. Okay. Projected EPS, earnings per share, is going to be 114. Okay. So basically another 30, 40, 50% gain almost. Actually, they're predicting it at 5,000 rupees per share kind of a target is there according to FY25E estimates, which will go even more further because that is just the estimates they're taking today. So if it actually reaches this in FY23, this will become easily, this will triple over maybe 5 years. Maybe over 5 years it will triple. So not if it continues this trajectory. So from a 58,000 market cap company, it can become 1,50,000 crore market cap company. This is possibility is very high. Possibility is very high. Yeah. I'm just looking at it from a return ratio perspective. Dividend payout ratio is very less anyway, so it's okay. Dividend yield is not to be considered. ROE, ROC is very attractive. Very attractive. Very, very, very attractive. Okay. I think we don't need to look further. I think whoever gave this recommendation, very good. I think we can take a buy call on this right now itself. But this is going to be a long-term buy call. Okay. We can take a position here, which is this, which is quite good. I think I'm going to add this in my core portfolio as well. This looks very nice. Nice find. I think I'll add this in my portfolio also. This will be a stop loss of 20% is what I can take, max loss. If at all it goes down so much, it is 2411. So huge stop loss. It's a very big stop loss. I'm assuming that it won't go down. but you can take a position here. I see the maximum it can do is it can just come down a little bit, consolidate and go up. But looking at the fundamentals, I'm looking at a long-term picture of 2-3 years. I would keep this as a hold for at least 2 to 3 years. I think 3 years will take for it to come, for it to actually give good results on this. So yes, I think this is a very, very, very good stock from what I can see right now. Again, let's keep this on our tracking list as well.